What if I told you that Miami just became unaffordable overnight? How do you think that would make you feel? You might think, wow, that's too bad, but it's not my problem. Or maybe you feel a bit surprised because Miami has always been expensive. Well, those feelings are natural, but I'm here to break some news. This isn't just a Miami problem. It's a canary in the coal mine, a warning sign for the rest of the country. The latest data shows that Miami rents are up 18% compared to last year. Meanwhile, wages haven't budged much. In fact, according to the Economic Policy Institute, hourly wages for Miami workers were down 3.6% in September compared to the year before. The median home price just crossed the $600,000 mark. That locks thousands of hardworking families out of the market and turns homeownership into a luxury reserved for the lucky few. And this isn't happening in a vacuum. We're seeing similar trends across the nation. Wages aren't keeping pace with inflation and home prices, and that's leaving millions of Americans struggling to get a piece of the American dream. So let's talk about what's really going on in the Miami housing market, what this means for the rest of the country, and what you need to know to protect yourself and your loved ones. Number 1. A city under pressure. We all know that the Miami housing market has been competitive for some time. But lately, the atmosphere here is changing. The days of bidding $1 million over asking are fading fast. The luxury market is showing cracks, and buyers are starting to push back. Take a look at this graph from Zillow. It's a measure of how fast prices are rising in Miami. As you can see, prices have been skyrocketing for several years, growing by more than 40% since 2019. But recently, the pace of growth is slowing down. According to the latest report, the year-over-year growth rate is only 1.7%. That's a big shift from last year when prices were climbing at a staggering 17%. Now I know what you're thinking. 1 percentage point doesn't sound like much, but let me put it in perspective. In a market like Miami, where prices are already above $600,000, even a small change can make a huge difference. Let's say prices had continued to rise at the same rate as last year. It's not just the pace of growth that's shifting. New listings are coming onto the market and inventory is slowly recovering. While the number of homes for sale is still low, it's on the rise. Days on the market are also increasing, indicating that sellers are facing more competition. But here's the kicker: prices aren't falling. Yet that suggests that there's still a lot of demand in the market, even if it's starting to cool down. Investors have been snapping up properties for years, sometimes paying more than 50% over asking. But recently they've started pulling back. According to Redfin, investor purchases are down 22% compared to last year. They're still buying, but at a slower pace. This is a sign that even investors are feeling the heat and starting to rethink their strategies. Now I know what you're thinking. Prices aren't falling yet. Are they ever going to drop? Well, here's what I think is going to happen. By the summer of 2025, Miami's median prices will either flatten or fall by 5% or more. Here's why. Hurricane damage and insurance costs are rising. Lending standards are tightening, and out-of-state investors are struggling to flip condos. All these factors are building pressure on the market. And eventually, something's got to give. Here's the thing. Predicting real estate markets is tricky business, even for experts. But I've been tracking the Miami market closely, and this is my best assessment based on the data. Now, some people might say I'm being overly pessimistic, but I like to call it being realistic. The market can't keep overheating forever. Sooner or later, we're going to see some price corrections. And let's be honest, prices won't fall evenly across the board. Some neighborhoods will get hit harder than others. But overall, we should see some price adjustments. But that doesn't mean things will get back to normal anytime soon. According to the National Association of Realtors, Miami rents will continue to climb, although at a slower pace. In September, the typical rent for a single-family home in Miami was around $5,000 per month. That's up about 5% from the previous year. But guess what? Even with that increase, landlords are having trouble finding tenants. According to Realtor.com, the average home in Miami spends 47 days on the market. That's the longest time since 2014. But here's the thing. Even though homes are sitting on the market longer, landlords are still reluctant to lower their prices. Why? Because they know that they could still get a good price if they wait for the right buyer. And even if they do lower their prices, they might not save that much money. For example, let's say a landlord lowers their rent from $5,000 to $4,800 per month. That's a nice discount, right? Well, not exactly. You see, property taxes in Miami are based on the rental income that the property generates. So if the landlord lowers their rent, they'll also have to pay less property tax. That means the landlord's profit won't be much different even with the lower rent. As a renter, it's frustrating to see prices keep going up even when landlords are unable to sell their properties. It makes you wonder if there's any relief in sight. According to NAR's projections, rent will continue to rise through 2025, which means renters will face even more financial pressure. Let's talk about the third trend. Investors are taking a step back. Investors have been a major force in the Miami housing market for years. They've snapped up properties, renovated them, and rented them out for a profit. But recently they've been pulling back, and that's for a few reasons. First, there's the cost of insurance. After the recent hurricanes, insurance premiums have skyrocketed, and that's eating into investors' profits. Second, there are tighter lending standards. Banks are making it harder for investors to get loans, which means they have less money to spend on new properties. And third, the condo market is a little shaky. Many investors have purchased condos in Miami, but they're struggling to rent them out. That's because many of these condos are located in areas that have seen a lot of new construction. There's a lot of supply and not enough demand, which means investors are stuck with empty units and no tenants. According to Redfin, investor purchases of single-family homes in Miami are down 22% from last year. And that's a big deal, because investors typically pay more than 50% over asking. When they pull back, it signals that the market is getting saturated. Of course, investors aren't completely disappearing. They're still scooping up properties, but at a slower pace. That's a good sign that the market is starting to cool down. So the bottom line is this. Miami's housing market is facing some serious challenges. From rising insurance costs to tougher lending standards and a saturated condo market, it's hard to see how things can continue to overheat. Prices are already starting to level off and rents aren't going down. That's a big shift from last year when the market was on fire. Now I know what you're thinking. What does this mean for me? Well, let's talk about that next. Number 3, the ripple effect. You might be wondering why you should care about the Miami housing market. After all, it's not like I'm going to move there anytime soon. Well, here's why you should care. What happens in Miami doesn't stay in Miami. It's a warning sign for the entire country. When I say Miami is cracking, I don't mean it's going to disappear. It's just that the market is starting to show cracks, kind of like a canary in a coal mine. You see, the housing market is a big deal in the United States. It's one of the biggest sectors in the economy. So when something happens in Miami, it can send ripples across the entire country. That's why it's important to stay on top of market trends and understand what's happening. Now, I know it can be hard to keep up with all the data and analysis, but I'm here to help. I've been tracking the housing market for years, and I'm here to tell you what's really going on. No spin, just the facts. Now, I know you probably have questions, like what happens if prices start to fall in Miami? Will it affect my mortgage rate? Will it be hard to sell my house? Well, here's the good news. Even if prices start to fall in Miami, it's unlikely to affect your mortgage rate or the value of your home. Why? Because the housing market is local. What happens in Miami doesn't necessarily affect what happens in your town. Of course, there are some exceptions. If you live in a major city like New York or Los Angeles, then you might see some spillover effects. But for most people, the Miami housing market is just a blip on the radar. But that doesn't mean you should ignore it. What happens in Miami is a warning sign for the rest of the country. If the market is starting to cool down there, it's likely to happen here too. So that's what I think you should know about the Miami housing market in 2025. Now, I know it's not the most exciting topic, but it's important to stay informed. So hit the subscribe button and stay tuned for more updates. Who knows, maybe next year I'll be reporting from LA or New York.